Hi, thank you for joining this mini webinar. It's going to be really crisp and short to the point webinar. Before we get into the presentation, let me just take a couple of minutes to introduce myself. I am CA Enraja, Chartered Accountant by qualification, a teacher, trainer by passion. I started my career as a banker, credit analyst with State Bank of India. Worked for a period of 4 years. In very short period, I had the opportunity of becoming team leader, credit processing cell. So worked on 250 plus projects. It's 5,000 crore plus size. Then came out and started my CA practice, had my practice for a period of 7.5 years. Alongside had this teaching training. Thanks to technology, today through online, I teach 2 lakh plus students all over the world, basically on banking, credit and financial analysis, and majority of them are working banking executive. I'm really glad that my courses are helping them, and I'm sure this course will be relevant and useful for you as well. Let's get into the webinar. I received this query whether company can borrow from directors. I'm going to answer this from Indian context. For this, first of all, let's get our hands on certain basics. That is, we should know what is loan, what is deposit, then we'll go deeper. What do we mean by loan? See, this question was asked mainly with reference to Companies Act. So whether loan is defined in Companies Act, answer is no. Then what is the normal understanding of loan? When we say loan, it is money given which should be repaid either with interest or without interest. Okay, it is money given which should be repaid with interest or without interest. And in this context, let us also understand what is deposit, because that is more relevant here. Deposit is nothing but receipt of money by the company in the form of deposit or loan or any other form. Okay, who is receiving it? Company. And this does not include certain categories of amount that are prescribed in consultation with Reserve Bank of India. So if a company is going to receive money in the forms like deposit, loan or any other form, then that is called as deposit, but it will not include certain categories of amount prescribed in consultation with Reserve Bank of India. Now we are going to that certain or one of the critical question with regard to deposit from company's point of view. Who can accept deposit? That is, which type of companies can accept deposit? See, public company, private company, both can accept deposit, but they can accept it only from members. But there is something known as eligible public company. They can accept the deposit from members as well as from general public. So now a question arises, what makes them as eligible public company? If they are having net worth not less than 100 crore or turnover not less than 500 crore. I repeat, if they are having net worth not less than 100 crore or turnover not less than 500 crore, then they are eligible, but they have to get prior consent in general meeting through a special resolution, and that should be filed with ROC before making invitation to public for accepting the deposit. Okay, so that's about eligible public company, but we'll be talking more about this in the following. Okay, now coming to the main question, whether company can borrow from directors, that is, whether the company can take loan from directors. See, if the company is taking loan from directors which is out of the own funds of directors, then that can be treated as loan by the company. Okay, that is permitted. But if the company is taking loan from the directors, but if it is out of borrowed funds, then a question arises whether that director is a shareholder or not a shareholder. Because if the director is a shareholder and that director has borrowed funds and that is lent out to the company, that is, company is taking loan from the directors out of borrowed funds of the director who is a shareholder, then that borrowing will be treated as deposit from member. Look, it is not counted as loan. It is treated as deposit from member. And that has many provisional applications, because this will attract section 73 subsection 2, and I have a lot to talk about under that section. Okay, and section 180 is also applicable in that case. So what does that say? Section 180 says, see, this is basically applicable for public companies, not for private companies. And what this section 180 says, company should take prior consent of members by special resolution. Okay, so if the company wants to borrow from director who is a shareholder, which is treated as deposit from member, that company should take prior consent of members by way of a special resolution. Okay, if money borrowed or money to be borrowed exceeds aggregate of paid up capital, free reserves, securities premium, and temporary loans which were obtained in the ordinary course of business. So what is the message here? They have to take the prior consent by way of a special resolution when money borrowed already plus money to be borrowed. So both put together, if it is exceeding the aggregate of this, a special resolution is required. Let us look at an example. Let's say there are two companies, A Limited and B Private Limited. See, already I told this is not applicable for B Private Limited. So listen carefully. A Limited has a paid up capital of 100 crore, free reserves of 40 crore, security premium of 30 crore, current borrowed amount is 5 crore. So what is their total position now? It is 175 crore. So if they are going to borrow from directors in the form of a deposit, and if it is going to be within this 175 crore, board resolution is sufficient. But if it is going to be above 175 crore, because already they are 175 crore, okay. So if they borrow now, it will go beyond 175 crore. In that case, a special resolution is required for borrowal above 175 crore. So look at here, till 175 crore, board resolution is sufficient. Beyond 175 crore, a special resolution is required. This is for A Limited. But look at B Private Limited. They also have total position of 175 crore. For them, board resolution is sufficient up to 175 crore, and even beyond 175 crore, board resolution is sufficient. Okay, right. So that's about section 180. I'm yet to talk about section 73 subsection 2. That I will give you as second part for this video. So we just answered the basic question. If director is using his borrowed funds for giving as loan to the company, then we have to ask a question whether the director is a shareholder. If he is a shareholder, it will be considered as deposit from member. Then what will be the scenario if the director is not a shareholder? If director is not a shareholder, then that borrowings will be considered as public deposit, because it is not a deposit from member, it is a deposit from public. So here comes the critical point. Whether all companies can accept deposit from public? No. Only eligible companies can accept deposits from public. Okay, so this attracts section 76, and this attracts various other provisions as well. Okay, so at this point, to answer the basic question whether company can borrow from director, if it is coming out of own funds, yes, it can be treated as loans. If it is coming from borrowed funds, then there is a basic question whether that director is a shareholder. If yes, that will be treated as deposit from member. If not, if the director is not a shareholder, it will be treated as deposit from public, and only eligible public companies can borrow in such a way. Otherwise, it will attract many consequences, which I'll be sharing in the following sessions. Thank you so much. We have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2,000 rupees. But for you, I'm going to give you a special offer. Here we go. Banking credit courses bundle. This includes course number 1, banking credit analysis process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2. That is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far I have introduced 7 courses of 1,999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral securities, a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over, some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complimentary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course. The link of the course I have given in the next lecture. So once you complete this video, just move on to the next lecture. You will find the link. Click enroll. I'll see you inside the course.